Hello and welcome back to another What It Costs Wednesday episode. Today we are going to look at 7119 Western Trail Drive. I'm Krishna Perkins, I'm your host, and this is a 3-bedroom, 2-bath home I'm going to be taking you through, and it's priced at $210,000. So I'm going to take you through the house and break down the pricing structure, FHA versus conventional versus VA. I think this home can pass all 3 loans. This is a house I just recently listed, and so the price I'm giving you is our current pricing. Now, there is a backyard pool and a pool in the neighborhood, so this home is really for those folks that just don't want to share. They don't want to stop the swimming when the pool closes. They want to keep it going, or they just want to swim whenever they want to. So keep that in mind on this property, but also keep in mind this home also needs a little bit of more eye makeup, so we think we've got it priced right. But if you disagree, let me know in the comments. And what would you do to make this home your own? We'll address that in another video on what some of those updates might cost you to update the home. So do me that favor there. And without further ado, we're going to start with FHA financing. I think this is a good match for FHA financing because I can see a first-time home buyer getting into this home and enjoying it because of the price point. And today's rate on FHA financing is around 6.72%, and that's going to depend on what your credit score is, all that good stuff. So if you have decent credit, but maybe it's got a couple dings on it, FHA is a good match. A lot of people choose FHA financing because of the generous debt-to-income ratio guidelines that it has over conventional financing. So if you have some dings, your score is a little bit lower, the interest rate is typically a little more forgiving than if you were to go into a conventional loan. Okay, so keep that in mind when you're shopping for your loan. Okay, what is your credit score, and what fits you the best. So in that regard, FHA financing fits the bill. Now, you're looking at about 3.5% down payment. That's the typical mandatory down payment. There are some other arrangements out there with FHA these days, but 3.5% is typically what you're going to do. Just keep it in mind, the less money you put down, the higher your final payment is going to be. So if you have money to put down what you can comfortably do in order to get into the house so your payment stays low throughout the life of the loan. The taxes on this house, looking at about $5,000 in taxes. $4,789 is what I have here. Insurance, I have estimated about $1,500, and again, that's going to be one that moves around. If you want a lower deductible, you probably pay some more for the insurance. If you have a high deductible, the insurance premium is going to come down. Again, this is one of those moving targets you're going to have to work around and figure out what's best for you, okay? HOA fee, $380 per year. Everybody's got to pay that one. And so that brings us to the payment, which is around $1,907. That's everything included, okay? If all of this holds up and what you decided in your payment, $1,907 per month on this house. The next loan, we're going to look at conventional, and that's typically going to come with about a 5% down payment. There are other models out there, maybe a 3%, 1%, whatever. I'm using 5 because that's historically what people do. The advantage with conventional is that once you reach 20% equity on the home, namely through upgrades, maybe additions, you redid the roof, you redid the windows, you redid the floors, you can get rid of that mortgage insurance premium that you're paying. And that what that is a insurance premium that you're paying to your lender that does nothing for you. Okay, it only insures the lender against you defaulting. If you can't pay your bill down the line, that insurance premium kicks in and helps the lender out if they have to kick you out. So you want to get rid of that as soon as you can, and conventional allows you to do that. Okay, you can petition your lender to get rid of the mortgage insurance. You can't do that on FHA. That is a drawback. You have to refinance the whole house to get rid of the mortgage insurance premium. That's like $100 a month. You want to get that off there as soon as you can because it costs you. So pros and cons, that's a real big one you want to decide on before you find your house. And then finally, one of the best loans you can possibly get out there for service members is a VA loan. And today we're looking at about a 5.99% rate. Let me back up 1 second. Conventional, we're looking at about a 6.875 rate for that last payment I gave you. Okay, so back to VA, 5.99% rate. And that comes in at about $1,813 payment. Okay, so FHA, $1,907 payment, conventional, $1,920 payment, and VA, $1,813 payment. And again, that's a zero down, true zero down product there. There are other things that you can do to enhance any of these products, down payment assistance and all that. But typically, when you do that, you're going to end up increasing your payment. Your interest rate's also going to go up. But these are the most popular, models here that you're going to have to choose from with just about any lender. So hopefully that helps you. Drop a comment in the comment section what you would do to fix this house up and make it yours, and I will consider answering those questions on the next video. Have a great day.